Hi, thanks for joining us in the next installment of Bridging the Gap. I'm Lisa Kirschenbauer, founder and president of Omega Wealth Management in Arlington, Virginia. Joining me is Jared Jones, director of investments and associate financial advisor for Omega. Hey, Jared, how are you doing?
I'm doing well. It's finally some good weather out there, so happy.
Yep, summer's shown up in Arlington, Virginia all of a sudden. So as the title indicates, we've launched our show to bring you different perspectives on money, markets, and life. Whether it's the lens of gender, generation, or political orientation, we hope to inform, educate, and entertain you. Today, we begin with some thoughts in 4 different areas. Number 1, why aren't stocks doing worse given the horrible economic news? Number 2, is the Fed propping up the bond market, and will that work? 3, why are people obsessed with giving the economy a shape? I can't wait to talk about that one. And last, just to wrap things up today, summer travel, what does it look like? What are we thinking about? In the future, we'll be providing weekly updates and ideas for you to ponder and connect with us on Facebook, LinkedIn, and our YouTube channel. And now for today's show.
Yeah, so the first topic today that we wanted to talk about was really why aren't stocks doing worse than they should be, or people think they should be doing right now. That's the $1 trillion question out there right now. I think there are a couple different factors at play. One, we're seeing a bifurcation in the different stocks that make up the market. So I think some of the technology-oriented firms and cloud-based technology that are really helping people live somewhat normally now are doing well, and those make up a large chunk of the overall market. So I think that's playing a reason. The other interesting article that we took a look at was different ways different countries are handling this health crisis. I think that's the interesting thing that we can look at is there, a bunch of different countries experiencing this at the same time and what strategies are and aren't working. So if you look at countries that are doing well, kind of on the downside of the pandemic curve, at least the first curve, you would expect that their markets are maybe doing a little bit better. They're getting back to work. Their economy is reopening. But that's really not the case when you look at the U.S. The U.S. is we're still at the top of the curve. We haven't seen a big decline nationally. I know in some pockets of the nation there are declines. And that's another maybe interesting topic is just the different microcosms of how states are handling this and how that will impact the economy moving forward as a whole. But you would think the U.S. stock market would be doing worse if you just looked at the economic news. So I don't know if I gave Lisa, if I gave you the headlines all the way to this point in the year, at the beginning of the year, where would you think the market would be right now?
Yeah, I think when you see unemployment numbers where they are, jobless rates, when you see the news from a lot of the companies, you would expect we would be at a negative point right now. And, I think part of what that's been about is a couple of things. We have a Federal Reserve, our central bank has just pulled out all the stops, and we'll talk about that a little bit more in our next topic. I think that's what's created a lot of liquidity and stability in our markets. And I think a lot of the focus for the market has been more on the health news and less on the economic news. And I think what we're going to see is over the summer as PPP, the Paycheck Protection Program ends, as people come off of unemployment, as some of the corporations that took money, big corporations that took money from the government, then turn around and lay off people later into the early fall. It seems to me that the market at some point is going to have to really digest what's going on with the economy. And just putting people back to work doesn't mean anybody's buying anything. As we saw actually just today, I mean, the retail sales numbers were worse than expected. So it's hard to understand what's going on right now. And I can imagine for a lot of our audience and regular investors, you're just scratching your head. And what do you do about that?
Yeah, I think it's important. I think we've said this in a couple of shows now, but there was an article that you saw earlier this week just talking about the stock market is not the economy. The stock market we know is looking forward, and I think maybe it gets ahead of itself at times. as we can see, maybe now, I don't know. We'll talk about the shape of the recovery too and what that means, but they're not connected. So
clearly not.
Yeah, and I think even if 2020 is not a bad year for the markets and bad year for businesses, that doesn't mean the stock market's going to go to zero. Let's say we can't reopen. I think one of the easiest ways to think about a stock is it's the present value of all its future cash flows. So if you take away 1 year of cash flows,
right,
if you have a long enough timeline, shouldn't be a big impact. So I don't think the markets are going to go to zero by any means, but it definitely could impact, and I don't know, we'll see where things go from here.
Yeah, I mean, I think investors need to have reasonable expectations, and it's better, I'm a big believer, it's better to be, stay invested, but be prepared for the worst and have it not happen. That's certainly better than the alternative where you got a little bit too optimistic, got a little too aggressive, and then took a hit. I think once we start to get into the early fall, the other issue that we need to talk about on another show is, you can open the economy, but if kids don't go back to school, people aren't going back to work. And I think we alluded to that last week. So that's a whole other factor. I know the president's starting to talk about that a little bit as well. Lots of moving pieces in trying to understand both the economy and the markets.
Absolutely. So the other thing we're talking about and looking at this week is a pretty interesting week for the Fed. The Fed actually started buying corporate bond ETFs. So ETFs are similar to mutual funds. They typically follow an index. They're a basket of different bonds. It's a little bit harder to think about in the bond market because they're so hard to buy all the bonds that make up the entire bond market in a way that's completely different from the stock market. So corporate bond ETFs try as best they can. They're not always perfect, but they try as best they can to mirror an index. And one way the Fed has tried to provide liquidity and stability to the overall markets, I think,
right,
is to shore up the bond market. We see the bonds are the number one place investors typically go for safety and stability. And in times like this, when we don't know where the market's heading, I think people are trying to shore their bets. Earlier on in March, we talked a lot about as a firm just how we saw the high yield bond markets going all over the place, performing like they shouldn't be performing necessarily. And even the corporate bond side, which should be safer. So high yield are companies that issue what's called junk bond. And it's pretty similar to what it sounds like. It's bonds that you can't put a lot of stock behind and it paying out over its lifetime. The company could go bankrupt and you just lose your money. Corporate ETFs and bond ETFs should be a lot more safe. You should believe that the corporations are going to last a long time. So we saw it in the high yield market. The Fed has been doing that for a while, shoring up the bond ETF market. But now they're doing corporate bond ETFs. So
yeah, and ETFs, again, for our audience, exchange traded funds. I mean, they are an unusual animal, unlike the Standard & Poor's 500, where it's a market basket of 500 stocks, or the Dow Jones Industrials, where it's a small market basket of stocks. To your point, Jared, I mean, it's impossible to try to buy the whole bond market. And right now we're just talking about, corporations. That's Walmart's bonds or Costco's bonds or Amazon's bonds or whatever. And then, there's a whole other conversation to be had at some point to talk about the municipal bond markets, which is, that's Arlington County Water and Sewer, or Fairfax County, hospitals. And, that's a whole other place that is probably going to need some attention at some point. But I think the Fed thought that this was a good place to start. And, when the bond market gets really out of whack, what we saw in March was not only was pricing off, but it was also impacting the mortgage market, mortgage rates. You would have expected mortgage rates had come down. You had a combination of so much demand for refinancing, people trying to take advantage of those low rates, and then the whole bond market itself just being out of whack. And so it's really an important element that the Fed's taking on. But I'm sure you didn't think when you were in school and you were learning about the markets that you were ever going to hear that the Federal Reserve was buying investments that we all invest in.
Right. Yeah, definitely not. And everyone thinks about the tools in the toolbox for the Fed. We all know, or we all should know maybe, that they control the overnight lending rates. So the interest rates we see all the time, the Fed raising and lowering interest rates. So that's one we should all be aware of. But I think another aspect of it is providing liquidity and stability to the overall markets, right? That's another mandate that they have. We saw back in the financial crisis, they actually bought up some of these mortgage-backed securities that were going bad. Never did I think that, you would see the Fed stepping in to buy a broad swath of corporate bond ETFs. So it's definitely an interesting tool. I think it is proving to work. Another reason I think they might be looking at doing this is you get to provide stability and liquidity to the overall markets without necessarily providing or showing favorites, I guess, to different companies and going in and buying actual bonds. You can do it much easier this way. And I think, they've been doing it for a couple of days now. It seems to be working. The markets don't seem to be going as volatile as they were a couple weeks ago. So we'll see how it plays out from here. But for now, I think it's working okay.
Knock on wood.
Knock on wood for sure. Yeah.
Well, one of the other things that we have been talking about within our firm is you hear a lot in the news about, well, what's the recovery of the economy going to look like? Is it going to be a V, so down, quickly up? Is it going to be a U? I heard on a call with Liz Ann Saunders, who's the Chief Investment Officer for Schwab. She was talking about a W, so down, some recovery, maybe down again before we have another recovery. And I was starting to think that might be the possibility. I mean, I think most people have given up on V. We're not having a quick recovery. Yes, we've had some recovery in the stock market, but from an economic standpoint, to your point, Jared, the markets and the economy are not the same thing. When we look at the shape of the recovery for the economy, then we were starting to lean towards U, maybe the W. But now this week, really interesting, we're talking about the swoosh, like the Nike swoosh, that down and then sort of a slow, long recovery. And I don't know, maybe that's it. But I think what's interesting is why we feel like we need to come up with a shape. And I think what Jared and I have been talking about is there's so much uncertainty out there in so many places, from a health standpoint, an economic standpoint, a financial standpoint, for you personally, that human beings don't like uncertainty. The stock market doesn't like uncertainty. And with trying to come up with a shape, we're trying to create some certainty around what we can expect. I think I may have talked about this last week. What I loved about what Spain is doing in their recovery is they laid out a week by week plan for all their citizens about what was going to open when, and creating that sense of positive expectation and certainty just feels a lot better. But without that, we're all left to guess. We're all a little anxious. I'm wondering if you have some thoughts about the swoosh. Is this the new shape of the recovery?
Yeah, I get a kick out of, we have to call it a certain letter of recovery. It's just funny to see the financial pundits all try and pontificate what the shape of the recovery is going to look like. I think I joked that last week or the week before, it's going to be like a K recovery or something, just like something that wouldn't make any sense, just to give it a shape. But I think right now, we really need to be able to hold both outcomes equally. Like there is a very real chance that the market could not retest lows. I think that's a real possibility. We could see, for whatever reason, we get the market continuing to steadily climb, maybe not get back to all-time highs where we were in February, but we could see the rest of the year not have a dip for various reasons. I can't say what they would be, but I could see that happening. And equally, just as equal, we could see the markets retest the lows or even go below lows. We could get some horrible economic news or horrible health news. We could reopen the economy, go terribly. I saw a funny joke. We're trying to reopen the economy, I think, right now, like we're cramming for a college exam. We're not quite sure if we're going to pass or fail. We've been up studying all night, and we're going to do it either way, but who knows if we're going to pass or fail right now. So, as far as the markets go, it could very well go bad. It could very well, continue on this path that we've seen since the bottom in March, where it's been a slow, steady climb, I think.
Yeah, I think your point about holding both possibilities and preparing your portfolio for both possibilities, certainly that's what we're trying to do for our clients as best as you can. It's just that, it's hard living in uncertainty. And, now for many of us, 2 months in to lockdown and shutdown of a economy, it gets a little old, and you'd like to know that things are going to get better. And who knows? We'll probably have some more shapes before this is done. And, what we often, we really don't know the shape until we are out of it. So
Yeah.
this will be something to study, for another group of students at some point in business school, and, financial planners, to understand what did it look like. And maybe we're going to create a new shape out of this whole thing.
Maybe. I don't know what the new shape would be, but we'll see. Maybe a hexagon, right?
There we go. Right. Let's get everybody thinking about what that looks like. Well, so, the last topic that we have been starting to kick around at our firm, and certainly I've been thinking about personally, is summer travel. For so many people, many of our clients, friends, family members, certainly we had a big milestone trip planned for this summer, which all has been canceled because it was going to be in Europe. And actually I think Europe's starting to open, but I don't think anybody's going to let us into other countries at this point. So I think we're all having to rework our summer travel plans, or our summer vacation plans. And, to be sensitive to the fact that there are definitely families hurting who are just trying to put food on the table. I understand that, and so much more difficult. And certainly our hearts go out to those people, and we're certainly looking for ways to help support them. For some of the rest of us, we're trying to figure out, how do we regroup with our family members and create some sort of experience, because we know experiences are really important. They're really worthwhile. What I've been thinking about, and I'm starting to encourage both my team and also some of our clients who are fortunate enough to work from wherever, or maybe they're retired. Where do you want to be this summer? So much is happening online and virtually. If you've got a laptop or an iPad or a computer of some sort, even your phone, honestly, for that matter, a lot can still get done. So the question becomes, where do you want to be? So that said, there's a lot to think about, because as we know, some states are not letting people from other states in. That's, back to your point, Jared, it's sort of like we're the world with all these different states with different rules and different processes and phases for coming out of their lockdowns. So, you have to be thinking about, where can we stay? Do we want to stay at a hotel? Is it going to be safe? Where can we get food? And will the state we're trying to go to let us in? I don't know. You may be thinking about some other things as well around this.
Yeah, it's definitely hard to wrap your head around. I was telling you before we started taping that this week is kind of the first week where it hit me that summer isn't going to be the normal summer. We're not going to be out having cookouts, 4th of July, and going to the pool.
Nats games. No Nats
games. Yeah, which is sad. I'm a little bummed about it, but you're right. We could feasibly go somewhere. I think it's pretty safe to say we'll be working virtually, at least for the majority of the summer. So I think a lot of companies are starting to think about it. Just saw this week, Twitter actually said you can work from home forever. Wow. Which is something crazy. But yeah, I think it's a question of what's available to you. So where can you go? I don't know. A lot of people are going to be getting on planes right now. So,
although some people are.
Some people are. That's right. I don't know if you're going to feel comfortable going to the beach this summer, or maybe going to a national park. But I'm also thinking, like, okay, if I can think about that, I'm sure everyone's thinking the same thing. Like, everybody's probably going to want to go to the beach right now. Is that going to be a good idea? And then, where could you stay? How can you be sure that where you're staying is safe? I guess it's probably better for like a rental home than a hotel. At least you can be sure that strangers aren't coming and going to your rental home. Maybe your clients have other options, but it's definitely something to wrap your head around. I'm not sure I have a good answer yet. I'll work with my girlfriend, but we'll figure something out, I'm sure, because I think it's important that we try and have some semblance of normalcy. And summer vacation is an annual thing for so many families in the country.
Yeah, whether it's just going to the beach, something pretty modest. I think, the other thing I think about, and we're just, again, starting to get our heads around this at Omega, is that often I was in the spring, I often travel a lot. And so I would get some breaks out of the office traveling to conferences, whether I'm speaking or just attending or going to see other clients. And we've just been going, Monday through Friday, full on. And then with the sense of, the vacation plans getting canceled and everything. I think it's important for people to get a break if you can. I mean, again, we know that there are people who need to get back to work because their family is depending on their income. But there's also other people where they are able to work from home. They're working every single day, actually sometimes finding a hard time separating work from home because it's all in the same place. Taking a break here and there, even if all you're doing is not getting on your email for a day, I think is really important from a self-care standpoint to get through all of the uncertainty and all of the unknown. So, I think this is something that we're going to be trying to figure out and think about, and we'll certainly be talking about more on the show. Any last thoughts you have on summer travel?
No, I think I'm just curious to hear what people watching this video are going to do for summer. So if you don't mind, share with us, comment on the video or send us a quick email. We're definitely curious to hear how everyone is going to be handling their summer travel plans. So thanks for watching this time. We're going to continue to put these out while we're all under quarantine. It's actually kind of fun recording these and talking about different topics with you, Lisa.
I'm enjoying it, Jared, and thanks to everybody who's checking in. You can connect with us on Facebook, LinkedIn, and of course our YouTube channel. And we really appreciate your ideas and feedback.
All right, thanks, guys.
All right, take care.